Hello, everyone, and welcome to today's NinjaTrader ecosystem event, trading strategy proven for nearly 50 years. My name is Patrick Hodges, and I am the NinjaTrader ecosystem vendor relations representative. Before we start today's webinar, I have a few housekeeping notes. Secondly, this webinar is presented by NinjaTrader LLC, which is the technology company responsible for developing and supporting the NinjaTrader trading software. Brokerage-related questions should be directed to the NinjaTrader brokerage using the phone number or the email that you see on the screen. Lastly, if you are new to NinjaTrader, please make sure to sign up for a free NinjaTrader account, which includes access to 14 days of complimentary real-time market data. Our platform is always free for advanced charting, strategy backtesting, and trade simulation. You can create your free account by following the link on the screen and then clicking the Get Started under the Welcome section. Now, before I turn the mic over to Steven here today, it's important to understand that futures, foreign currency, and options trading contain substantial risk and is not suitable for every investor. It is possible to lose all or more than the initial investment. Risk capital is money that can be used. It is possible to lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Also, please remember that these training sessions are not a solicitation or a recommendation, but simply educational in nature. And once again, I want to thank everybody for joining us here today. And without further ado, it is my pleasure to welcome to the room, to the NinjaTrader webinar room, Steven Primo.
Okay, thank you, Patrick. Thanks, everyone, for attending today. We got these few bugs out of the way. And welcome to this educational presentation. Today, I want to talk to you about a strategy, a trading strategy that actually is proven for nearly 50 years. I know that personally because I've been trading it for nearly that amount of time. And by the end of today, you'll actually get the first 2 rules of this strategy. You can start applying and see how they can elevate your own trading. There are only 4 actual rules in this method. I'm going to give you half of them today for free. And you can apply this to virtually any market, any time frame. Now, let me just share with you an example of how this works, okay? Let's take a look at this chart here in Costco. Here's an older chart in Costco. Most traders looking at this would say, well, it's kind of going sideways. There's no real direction. In fact, this is a directionless market. This is the kind of market we've all been told to stay away from, right? But with these 2 methods, these 2, I should say, rules that are in this particular method, it actually would have generated a buy signal right here in the middle of that directionless market. And potentially you could have captured 190 points coming into last month. So this is what we're going to be discussing today, a trading strategy proven for nearly 50 years, and I've been actually trading this that time entirely myself. So welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading. I've been trading now for 47 years. I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years, and 9 of them I was a specialist. That's where we get the name Specialist Trading. If you're not familiar with what a specialist is, there are not a lot of them around that much anymore because of online trading and electronic trading. If you ever Google those old pictures of the trading floors with a lot of guys making weird hand signals and paper all over the floor, where those gentlemen behind those large wooden podiums were specialists. That means they specialized in making a market in roughly about 50 or 60 stocks. So I did that for 9 years. I made markets on IBM, Waste Management, US Air. I did that during the crash of 1987 and the bull market that followed. After that, leaving the floor, I went on to manage money and to trade my own account. And about 15 years ago, I teamed up with my sister site, Pro Trader Strategies, and we developed Specialist Trading, where we only deal with educating traders. That's our goal, just to educate you as a trader, because we really feel that that's what's missing from most traders, and that's what is leaving you from being a consistent trader. So we are first and foremost an educational company, and you'll see that attention to detail in today's educational class. Now, before I begin, as always, we're required to share this with you, so please take a moment to view our disclaimer. I'm going to share with you a lot of performance results using this particular strategy, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And since we are first and foremost an educational company, all examples are strictly for educational purposes only. Now, another way to get education from us on a daily basis is to follow us on Twitter or X, however you like to call it. There's my handle right there, abbreviation for specialist trading. Every day I post anywhere from 5, 6, or 7 snapshots of signals that our methods have generated, as well as little bits of financial wisdom. So there's lots of great free education on a daily basis. Please feel free to follow us on Twitter. Now, remember, as I stated in the opening statements, we are first and foremost an educational company. So what does this mean? Well, this doesn't mean that you will hear me saying what I think the market's going to do, or what I think the perfect stock is to buy, or the perfect stock to sell, or what I think you should be doing in the futures markets, or the best time frame to trade. Those are things, in our opinion, that you must find out for yourself. You see, if there's one thing I've learned in 47 years, it's the only traders that are still trading from my days on the floor are the ones that make their own trading decisions. You see, most traders who are still consistent after 20, 30, 40 years don't rely on chat or trading rooms to find out what to buy or sell on a daily basis. They don't have a signal service. They don't wait with bated breath for the earnings to come out. And they don't listen to the gurus on TV. Sure, they've had mentors and educators that taught them certain things, but once they learn them, they rely on their own instincts and on their own education to make their own trading decisions. So this is the service we provide at Specialist Trading, okay? We want to teach you these things so that you can make your own trading decisions. You'll see that in today's educational presentation. Now, before we begin, I'd like to take as many questions as possible, but I like to take the questions at the end. So if you have a couple of questions, please write them down and try to remember them. I have a lot of slides to share with you, and I only have a limited time. So please write them down and try to remember them. I promise I will get to them at the very end, okay? All right, with that stated, let's begin. Now, I want to start off with a theme of the day. This is something that my mentors taught me, because when I first started trading on the floor of the exchange, believe it or not, even though I had advanced information in those days, it was advanced, but in today's terms, it wasn't at all. But in the 70s, it was extremely advanced, and we had computers at the time where no one had a personal computer. I still struggled my first year or two while I was trading. And I was lucky enough to have some mentors on the floor. They were specialists themselves who saw how much difficulty I was having. And this is what they said to me. They said, Steve, it's the easiest thing in the world to overcomplicate your trading. I mean, think about it. It doesn't matter if you've been trading 30 years or 30 minutes. Anyone can overcomplicate their trading. Doesn't matter what market, what time frame. You can pile on as many indicators as you like. In fact, if you would have looked at my trading screen when I first started trading on the floor, I had 30, 40 indicators plotted on my screen, okay? You can follow as much fundamental news as you like, earnings, economic reports, anything, okay? As a specialist, I was making markets in roughly about 50 or 60 stocks. I had to know the earnings estimates and the inner workings of each company then. So I was plastered with fundamental information, okay? It doesn't matter how long you've been trading. You can overcomplicate your trading with tons of things. But guess what? It's the most difficult thing in the world to simplify your trading. Why is that difficult? Because it takes guts to strip away and release all of those things that we've been taught, all of that conventional wisdom that's supposed to work, but really doesn't have a high level of consistency. For example, I was always taught, okay, you've got to look at the earnings, you've got to know where direction the company's going, the CEO, and this is what's really going to help you trade the stock, all right? So I had earnings estimates on all of the stocks and companies I traded, and I can't tell you how many times the earnings were supposed to be good and the numbers came out and they were better than expected and the stock went straight down, or vice versa. Or I can't tell you how many times support and resistance. This was supposed to be major, major support. This is where the institutions were buying. And it didn't hold. It went through like a knife through butter. So there are certain things that we've been taught that really do not have a high level of consistency because they're too subjective. We want things that are cut and dry, that are black and white. And my mentors taught me these things, and these are the same things I teach to all of my students around the world in over 115 countries and in every state in the United States. And I've really elevated the consistency of a lot of traders simply by simplifying their trading. So that's the theme of the day. You're going to see how simple it is, these first two rules that I'm going to share with you, but how you can start applying them to your own trading. You can apply them to your own current strategy or create a strategy based off them, and you'll see how they can increase your odds for consistency. So what we're going to be talking about today, a method I've been trading for 47 years, is strategy number 4, okay? Let me give you a couple of the highlights of this particular method. First of all, it's a pattern recognition strategy. In other words, it looks for a pattern that repeats itself over and over and over again in any market and in any time frame. So we teach you how to identify this pattern in our course. Now, it's designed for traders looking to catch momentum, and oftentimes it will generate signals when it appears on the chart that there's no momentum at all. If you remember that first chart I shared with you of Costco, it was going sideways in a directionless market, but strategy 4 generated a signal because it's so sensitive based off this pattern that it can finally tune itself to see when momentum is entering based off this pattern. Okay. Now, when I originally started trading this, we were trading on the floor and in and out of trades roughly in about 2 or 3 minutes. That was the nature of trading on the stock exchange. But we've designed ways for traders to hold on to positions if you like, to hold on for days, weeks, even months if you'd like. And lastly, you can apply to all markets and all time frames. I'm going to share with you the rules, the first 2 rules of this method today. And most of the examples you're going to be seeing are on daily charts of some stocks, currency pairs, and futures. But remember, it can be applied to all markets and all time frames. It doesn't matter if you see something and you say, well, that's not the time frame I trade. It makes no difference. Once you know the rules of this particular method, it makes no difference at all. Now, the advantages of trading strategy number 4, it's extremely consistent. In fact, it's one of our most consistent methods. And by consistent, we don't mean that every trade is a winner. That's not what consistency means. Consistency actually is an awareness that you will have losses. And that's okay. There's nothing wrong. In fact, I lost today. I lost on my first trade this morning, and then I made 2 winning trades. So that's what consistency means. 2 steps forward, 1 step back. The reason why this trading this method is so advantageous is because it makes you a part of the process. Remember, you're in charge of your trading. That's the cornerstone to all our education at Specialist Trading. We're not force feeding you signals. We're not giving you nightly setups. We're teaching you so that you can do that on your own. And it's designed to be as simple as possible. Remember I said, it doesn't take a lot of character to overcomplicate your trading, but it takes a lot of character and courage to simplify it. And that means stripping away all these things that you've been taught that are supposed to work. It's extremely simple, strategy number 4, but it is very, very powerfully consistent. Okay, so I want to share with you the first 2 rules. I can't give away the entire rules. That wouldn't be fair. In the course, we teach the remaining 2 rules that generate signals. We also teach exit points. We teach stop placement and money management as well. And that's all included in the course. But what I'm going to share with you today are 2 of the entry rules. These are the first 2 rules you need in order for a setup to be generated. Okay, so let's look at this chart right here, this generic chart. It makes no difference if this was a tick chart or if it was a monthly chart of a stock, currency pair, future. It makes no difference. But here are buy rules 1 and 2. The first thing you want to see is that price bar closes above the 50-period simple moving average. In fact, this is the first thing we teach all our students. You must always have the 50-period moving average on your chart. We call this the buy-sell line because this tells us if we're going to be a buyer or a seller. In other words, if price is above the 50-period moving average, strategy number 4 will never, and I mean never, generate a sell signal. Conversely, if price is below the 50-period moving average, we will never generate a buy signal. This simple rule will increase your odds for consistency tremendously. This was the first thing my mentors taught me, and I've often said to my students, if I were stranded on a desert island and I only had 1 tool to use to trade with, it would be this, the 50-period moving average rule, okay? So if you don't believe how powerful and how simple this is, go back and look at your last 10 or 20 trades. I can almost guarantee you, if you apply the 50-period moving average, the reason why you lost was because you were buying below the 50 and selling above the 50, okay? So rule number 1, the price bar that you're looking at must be closing above the 50-period simple moving average. Now, rule number 2, that same price bar closes in the top 25% of its range. All right, so what does that mean? Well, in other words, if we divided this price bar into 4 but separate equal parts, we want to close in that top 25%. You see, if we close above the 50%, 50 simple moving average, that's telling us that the overall trend is up. And when that same price bar closes in the top 25%, it's telling us that the short-term trend is up. So now you have the short-term and the overall trend in sync. Remember how we said to simplify things? There's no reason to look at 2 different time frames. Once again, it takes courage to strip away these things that we have been told that are supposed to have high levels of consistency. But in my 47 years of trading, I found no consistency in that method. In fact, I think it's an urban myth. The only thing it's done for me is to keep me out of a winning trade while I've waited for the two time frames to line up. It's a lot simpler to look at one chart and to make sure that price and the top 25% are in sync. That's it. You don't have to look at two different time frames. So those are the first two rules for a buy setup. Now, let's look at a sell setup. They're the same thing, but we just reverse them. All right. As we look at this generic bar here, remember, it makes no difference what market this is. Could be crypto, could be a 5-minute chart of the E-mini futures, makes no difference. But here are the rules to go short, to sell. And these are rules 1 and 2. Once again, we want to apply the 50-period moving average, and price bar must close below the 50-period moving average. You will increase your odds for consistency if you're only selling when price is below the 50-period moving average. Now, a lot of my students say, hey, Steve, I got a fantastic signal the other day to go long, but I didn't take it because you say don't buy below the 50-period moving average, and it went straight up. Well, listen, yes, it's going to happen every once in a while. This is not 100% guaranteed, rock solid technique. Nothing's like that in the market. Over 47 years of trading, I've never seen anything that works 100% of the time. But what we're trying to do is put the odds in your favor. We're trying to give you an edge. Think of the slot machines in Vegas, okay? They have the worst edge at all of all gaming uses in the facilities in Las Vegas. But the slot machines are the most popular because they're so simple and easy. But they're designed to give you a winner every once in a while, okay? And that the reason why is so that you'll stay there. But if you stay there, over time, they know that you're going to give all your money back. Well, it's the same principle with the 50-period moving average. If you buy below the 50, sure, every once in a while you'll get a winner and you'll say to yourself, hey, this doesn't work. I thought it's not supposed to work. But remember, it's just like the slot machines. You'll get a winner every once in a while. But if you keep doing that over time, you'll give it all back. Take it from someone who knows, who almost stopped trading my first 2 years because I was doing these same things. So that's rule number 1. The price bar must close below the 50-period super moving average. Rule number 2, that same price bar must close in the bottom 25% of its range. So that would be right here, the bottom quarter of its range. That's telling you that the short-term trend wants to go down. If we're below the 50-period moving average, rule number 1 says the overall trend is down. If we close in the bottom 25%, the short-term trend is down. So once again, absolutely no reason to overcomplicate your trading looking at 2 different time frames. There's no reason to. Just look at that and you'll know if you're in sync with both time frames. All right, so there you have rules 1 and 2. Now let me share with you some recent strategy number 4 examples. Remember, most of these are going to be daily charts of stocks. You can apply it to any market, any time frame. And also, once again, I apologize. I cannot give you, whenever I do this presentation, people say, hey, well, but what about the other 2 rules? Or where do I exit? Or where do I place my stop? Those are all things we teach in the course that come along with all of our course students, okay? All right, let's look at this chart in Microsoft. Most traders looking at this would say, hey, not really anything happening. We went straight up and then we're going straight down. So the market really isn't telling me anything. Well, see, that's the way we're always trained to look at charts. Sure, using limited information, yeah, it's telling us nothing. But what's the first thing we teach our students? To apply the 50-period moving average. And now we ask ourselves, where is price in relation to that? Well, price is above. So where most students say to themselves, well, no, it's not telling me anything. I have no idea what the market wants to do. The market is actually telling us, yes, it wants to go higher. The overall trend is up. So we're that much ahead of the game. Now we want to look for bars that close in the top 25% of their range, which meet also the rest of the rules. Now, this one closed in the top 25. This one did as well, and so did this one. But remember, there are 2 remaining rules to fit that pattern, and the only one that met all the requirements was this one right here. Okay, so a buy signal was generated right here in Microsoft, and the stock rose 20 points in 1 week. Remember, in the course, we teach you different exit points, different stop placements as well, and the entries as well, too. Okay, let's look at this example here. Here's an Apple, all right? Once again, doesn't look like much is happening, kind of going sideways in a range market, right? You want to stay away from a range market. But is it really a range market? Because if we apply the 50-period moving average, it may appear to be a range market, but it's a range market when the overall trend is down. So that means we're only going to be a seller. I don't care if some guy in some chat room tells you, oh, you've got to buy it here. This is amazing, amazing support. Trust me, that's what I used to do, and it didn't work then, so I don't understand why you think it would start miraculously working now. So we're looking for bars that close in the bottom 25%. This one did, this one did, this one did. So we have 3 that did, but remember, they have to meet the remaining rules and requirements of the strategy. So we have 2 that closed there, and they both were valid sell signals. Look what happened. Apple fell 15 points. What happened to the support, right? Remember, you will have a higher level of consistency if you only sell below the 50-period moving average. How about this chart here in PCAR? All right. Looking back in hindsight, it's easy to say, well, yeah, this is in an uptrend, but how would I have known back here? I would have wanted to know back here that we were going higher. It's easy to see right here, but I've missed most of the move, right? Well, if you apply the 50-period moving average, guess what? Even though this was going sideways well in advance of that big trend, it was telling us, because it was above the 50, that the overall trend is down. So where most traders, this is why it's been estimated that 80% of all traders fail, it's because you're not using simple things, you're overcomplicating things. If you use this simple rule of the 50-period moving average, you would have known well in advance that an uptrend, an overall uptrend was about to take place. We had buy signals generated along the way, where potentially you could have captured 30 points. All right. Obviously, this is an uptrend, right? In Tesla. Higher highs, higher lows. This is, textbook 101, technical analysis. This is an uptrend, right? Remember, most of the stuff we've been taught doesn't have a high level of consistency. We are below the 50-period moving average. This is not a buying opportunity. This is a selling opportunity. Even though it may be rising, we should look at this from a seller's point of view. We look for bars that close in the bottom 25%. And this one met all the requirements, so a sell signal was generated here. So we waited 1, 2, 3 days until ultimately it fell out of bed, down 40 points. See how simple this is? We're not listening to earnings, to interest rates, to economic news. We're not having to go to chat rooms. Once you learn how to release all of that, trading becomes a lot simpler. All right, once again, the novice trader would say, Steve, there's nothing going on here. We're kind of in a whipsaw market. We're going up. If you buy here, it goes down. You sell, it goes back up. So these are the kind of markets you want to stay away from, right? Well, maybe. Let's apply the 50-period moving average. And even though it appears to be a whipsaw market, the market is telling us, not me, not some guy in a webinar, not some guy in TV, the market, the very thing we are trading is telling us the overall trend is up. So what does that mean? Well, that means we want to only look at this from a buyer's perspective. If we want to trade this, we start looking for bars that close in the top 25% of the range. And we have a number of them here. Did they meet the requirements? Yes, they did. 1, 2, 3, 4. So where we thought this was a whipsaw market, this was actually a buying opportunity because AMD actually soared 50 points in the next 2 or 3 weeks. All right, let's look at Adobe right here. Once again, you got to buy this, right? This is where people would say, hey, I went to that guy in that trading room and he says, it keeps going up. You got to buy this. It's really strong. The market looks fantastic. You got to be a buyer. Well, this is why most traders fail, because you're listening to someone or something else tell you what to do. We teach our students to only listen to one thing. That's the chart in front of them, the market. So once we apply the 50-period moving average, what is the market telling us? It's telling us that the overall trend is down and that this rally is a selling opportunity, not a buying opportunity. So we want to look for those 4 requirements to be met. Well, we have 2 bars that close in the bottom 25% right here towards the high of that rally. They're both sell signals. And look what happened. Isn't it funny? The stock fell 85 points in just 2 days. Isn't it funny how some news or some announcement caused this to gap down? Since we don't follow fundamental news at all, in fact, I stopped looking at news over 4 decades ago, how would we know to go short 2 days in advance? Because the market tells you just about everything you need to know. It's so much simpler, less subjective. It's very cut and dry. You're looking for price bars below the 50-period moving average. You're looking for price bars that close in the bottom 25%. You're looking for the remaining 2 requirements of that pattern. And that's it. Okay, clear-cut downtrend, right? This is where you want to stay out of things here. It's going down. You want to, this is the euro yen, by the way. You want to stay out of this. The pair is going much lower. Well, we see here that the 50-period moving average is ascending, and we only had one close below, but then it popped right back up above. So one close below is not enough to tell us we have to be a seller. We teach our students to have anywhere from 2 to 4 or 5 closes, either above or below, to tell us what the overall trend is. So one close below is not enough to say, hey, I've got to be a seller now and look for those selling patterns. So once we bounce back up, we start looking for those buy setups again. We close in the top 25% here. So that was a buy setup in the euro yen. And guess what? 400 pips in 1 week. Okay, so for all you currency pair traders, it doesn't matter. You can apply the same rules, the same requirements. Just because you change markets, change time frames, makes no difference. Nothing changes. I know a lot of educators have these fantastic methods and strategies. They work great. And then someone says, oh, can I apply these to the E-mini or to crypto? And they said, well, no, they don't work on those markets. You have to kind of get another strategy for that. Well, I don't believe in that. If something works in one market, it should work in all markets. So there's nothing with strategy 4 where you have to alter or change just because you're looking at a different time frame or a different market. Or we can look at a daily chart of the E-mini futures. These are the June contract, okay? Obviously, it's been going straight up, right? Up until the last week or two. When I took this snapshot, the market had still been going straight up. Well, how could we have known in advance way back here, right? That's where we'd like to know, well, is the market going to be in an uptrend or not? Well, you apply the 50-period moving average, and not me, not some support and resistance line, but the simple 50-period moving average was telling you, I want to go higher. The overall trend is up. Okay. Then all you have to do is look for the remaining requirements of the pattern and look at all the buy signals. Look at all the chances you were given to go long the E-mini futures on a daily time frame. Now, it wouldn't matter if this was a 5-minute chart, a tick chart, or a weekly chart. You'd still get setups based on this pattern. Had you traded the daily bars here, you had a potential to capture over 600 points in the last couple of months. That's how valuable this method is. Now you know why I continue to trade this. I traded this today on a few markets today, but I continue to trade it for over 45 years. All right, let's go back to that first chart we shared with. This is the beauty of strategy 4 because it will identify momentum when the chart appears to have no momentum at all. For example, once again, this weekly chart of Costco appears like nothing is happening. If you're a swing trader or an investor, you would say to yourself, well, I'm going to wait for it to break out, or maybe that guy in that trading room you follow or that blog you read says, no, the company is bad. The earnings are not that great. I don't like what direction the company's going, so you've got to sell it. It's not fundamentally sound. This is the way I used to trade some 4 or 5 decades ago. And remember, once again, I couldn't make a dime using those things that people continue to use today. So you're always free to trade any way you like. It's not our job as an educator to tell you not to trade that way. But trust me, I have taught my students around the world that there's absolutely no reason you need to look at that in order to trade if you don't want to. It's a lot easier to simplify your trading. Where someone would look at this and say, this is a directionless market. I don't like the direction of the company either. My students would say, well, no, I apply the 50-period moving average and the market, the chart is telling me the overall trend is up. That means it wants to go higher. Next thing I do is look for bars that close in the top 25%. And this one did. Even though we had one close here, another one close here, another one here, they did not meet the requirements of the strategy. So this was the only bar amongst all these bars that closed in the top that generated a buy signal. So within the midst of that directionless market, where that guy on TV said not to invest in this because the company is not going to have good earnings, our students said, no, this is actually a buy. And you could have potentially, coming into last month, you could have potentially captured 190 points. Remember, the theme of the day, what my mentors taught me, it is the easiest thing in the world to overcomplicate your trading. How many indicators do you have on your screen? How many blogs do you read? How many trading rooms do you go to? Are you overcomplicating things? Remember, once again, I'm still trading after 47 years. I stopped looking at news. I stopped looking at all those things decades ago, and I'm still here. If I'm still here, I'm living proof that it really is not required. But trust me, if you want to use those things, by all means, go ahead. But it's not in any way required. It's very easy to overcomplicate your trading, but it's the most difficult thing in the world to simplify your trading. By simplify, we mean strip away all of what my mentors called noise that really doesn't lead you on the path to consistency. It actually leads you the wrong direction. So learn to let go of these things and you'll learn to become more consistent. It takes a lot of courage, but once you do, you're in for the ride of your life. Okay, let's recap before we go into question and answer. Strategy number 4, highlights. It's a pattern recognition strategy. We teach you all the requirements in the course based on a pattern that repeats itself over and over again in any market, in any time frame. It's designed for traders looking to catch momentum, and you saw that in the examples I just shared with you. And you can apply it to all markets and all time frames. Now, the advantages are it's extremely consistent, but remember, consistency means there will be losses from time to time. That's okay. And a consistent method is one that's able to recoup those losses, often on the very next trade. So consistency is a 2-step forward, 1-step back approach. It makes you a part of the process, and we show you that in the course, okay? We show you how to take advantage of different ways to enter, different ways to exit, different ways to use your stop placement, as well as money management. And it's designed to be as simple as possible. Once you know how to recognize this pattern, you say to yourself, I've never realized how simple this is. So I don't have to look at all this other stuff. It's like, no, you can start seeing results right away. So ask yourself, after what we showed you today, do you think this strategy can help your trading for the remainder of 2024? Well, I think your answer is yes. So because of that, we have a great offer to share with all of you attending today. We're going to share with you our most consistent strategy. That's strategy number 4. You're going to get instant course access, detailed instruction. You'll learn all the entries, all the exits and stop placements. You'll get the complete course rules. Remember, you can apply to any market, any time frame. But we're not going to stop there. Remember, this is a strategy that I've been trading for nearly 50 years, but we're also going to include an extra bonus. We're going to include another course, which is called our Secrets of a Stock Exchange Specialist video seminar. Some years ago, I was asked to be the head speaker at a conference in Colorado, and I spoke for 3 hours and they recorded the presentation. So that's what this is. This is a video seminar where I talk about many more high probability trading edges. I talk about which indicators not to use. I go into the difference of a system versus a strategy. I talk about the number 1 chart pattern you should always be applying and how to be on the right side of the market. But here's the best thing about this 3-hour video. It gives you the complete course rules to strategy number 1. This is one of our premier pullback methods. Now, if you're not familiar with what a pullback method is, in an overall uptrend, it looks to buy at the low sell-offs within an uptrend. And in an overall downtrend, it looks to sell, go short in the bounces, in the rallies in an overall downtrend. Let me show you what I mean here. All right, here's an example in AXP, American Express. We have a nice uptrend in place, but all of a sudden it starts to sell off. Where most traders would say, hey, that's the end of the uptrend, time to get out, take our profits. Strategy number 1 actually generated 2 buy setups right here near the lows of that pullback, and you could have potentially captured 45 points to the upside. These are actual strategy number 1 setups. Here's another one. Here's one in Apple going straight down, right? We're in a downtrend, but look what happened. Looks like it bounced. This could be called a reversal, textbook reversal right here, right? Gaps open lower and then closes near the highs. So where most traders would say, hey, it's time to go long, time to buy this, pullback strategy 1 generated a number consecutive sell signals, and we all saw what Apple did this last month, 20 points to the downside. You're going to get the complete rules to strategy number 1, along with strategy number 4. So let's break it down. Complete course rules and manual, strategy number 4. That's a nearly $700 value. Also, the Secrets 3-hour video course, that's a nearly $1,000 value, all right? Now, normally together, this would cost close to $1,700. Here's what we're going to do for all the people attending today. We're going to discount that price down to only $695, okay? You're only going to have to pay $695, and you're going to be saving nearly $1,000. That's nearly a 60% discount, okay? This is a great opportunity for savings, a great way to get 2 very consistent methods, and I'll be there with you every step of the way in the courses, teaching you how to identify these setups. Take charge of your trading for the very first time. Remember, it's our opinion that the reason why most traders fail is because you're giving your power away. You're letting someone or something decide how to trade for you, either in a chat room, a trading room, or some guy on TV or some indicator tell you what to buy or sell. You have to take charge of your trading. Our job as a mentor is to show you these things that have stood the test of time, that I use personally myself, that can elevate your trading. But then ultimately you have to take charge and become a part of the process. Here's your chance to do that for a very minimal price. Now contact my sister site. That's Pro Trader Strategies. You can call them. I would highly recommend giving them a call at area code 310-598-6677. They have trading consultants manning the phones. They would be more than happy to either take your order to the phone or answer any question that you may have about pricing, possibly having a payment plan. But they're there to work with you, and there's absolutely no obligation if you want to call, okay? That link you see at the very bottom is the link that will take you to the info as well as sign up page. It's not a live link, but you can copy and paste that onto your browser, okay? I believe we have about 5 or 10 more minutes for questions. So if you do, please go to the chat box. I'll try to answer them to the best of my ability. Oh, I see that NinjaTrader did post that link. Thank you very much. So you can just go to the chat box and they will have that link up there for you, okay? Let me see here, see if there's any questions. Oh, one of the main questions that people always ask me with all of our courses is, Steve, what if I have trouble? What if I don't fully understand how to do this? I haven't been trading for long enough, or this is not the style I've been taught. Not to worry, each and every one of my students will get my personal private email address, okay? So anytime you have a question, whether before the market opening, during the market hours, after the close, during the weekend, it makes absolutely no difference. You can contact me and I will answer it as quickly as possible. In fact, I was answering emails this morning before the opening, and it's the next best thing, I think, to having someone sit right next to you. You can share with me some snapshots, see if, Steve, did I do this right? And just it's the next best thing. I wish I could be sitting next to all my students around the world, but I just can't do that. Someone's asking why the 50-period simple moving average and not the exponential. Now, this is a good question. I always get to ask this as well, because when I first was taught this by my mentors, I said the same thing. In fact, I said, why not the 34-period exponential? Why not a weighted moving average? Why not a 20-period moving average? Because they said, feel free to experiment. And I tell my students, feel free to experiment with anything you want. But over time, we want something that's simple. Remember, that's the basis to all of our education. And we don't want to be changing for every time frame. For instance, if I happen to trade a 5-minute chart of the E-mini futures, someone would say, well, then I'll use a 10 or a 20-period moving average. But then I go to a weekly chart of Apple, well, then I've got to go to a 100-period moving average or a 200. And then if I'm looking at the long-term spiders, well, I'll look at a 200-period moving average, okay? We don't want to make trading that complicated. It's been my experience and my mentors as well that they said, you want to keep something constant. And the 50-period moving average seems to work better than anything. But remember, feel free to experiment. If you feel that the 20-period moving average works better for you, the style you trade or what method you trade, then by all means, go ahead. What we want to impress upon all our students is not so much whether it's a simple or the time frame of the moving average, but the concept of you'll only be a buyer if price is above, and you'll only be a seller if price is below. That's more important than whether it's an exponential or a weighted or what time period, okay? That's the thing we're trying to teach upon all our students. Would these strategies pass a prop trading evaluation? Well, remember, you're in charge. Everyone is designed, and we encourage everyone to trade differently. So there's no way we can get the same people to get the same signals, because a signal can be generated in the E-mini futures. We have 5 or 6 different ways to enter, 5 or 6 different sell setups, 5 or 6 different stop placements. That means we're going to come up, every trader will come up with, on the same setup, a different result. And we encourage that because, once again, what is our mantra? It's you are in charge. If you're the type of trader that doesn't like a lot of risk, well, then you'll use a certain type of entry that doesn't have a lot of risk, and you'll use a certain type of stop placement. If you're the type of trader that maybe has a $250,000 account, well, you'll use a different entry. Maybe you'll buy at the market. Maybe you use a wider stop, and you'll get different results. This is what we encourage, okay? Can I apply strategy 4 in any time frame or just in the daily? You can apply it in any time frame. I personally use it intraday trading of stocks, okay, and futures and currency pairs. Can you use this on the 1-minute chart? Yes, it doesn't matter. You can use it on tick charts. But please remember, with any method, it doesn't have to be one of mine, it could be one of yours, some other teacher. The smaller time frames, and I'm sure you all know this, the smaller the time frame, the more you will have chances for a lot more noise, a lot more back and forth, because that's just the nature of smaller time frames. So just be aware of that. The larger time frame out you go, daily, weekly, you'll have less noise. So you'll get a lot more signals on a 1 minute than you will though on a weekly. So it all depends. This is why it's up to you to decide. There's no way you can do back testing because we encourage everyone to trade differently, different markets, different time frames. Okay, but yes, I hope that answers your question. I think I have maybe time for one more. I don't know, Patrick. I just don't want to go over the time.
We have about 3 minutes, so we should be
Okay.
good.
Let me see, any time frame. Yeah. But that's the main thing. We encourage everyone to find their own way. Remember, we are not a systematic company. We are an educational company. I used to trade systems. I taught systems for other companies. And guess what? Each and every one of those systematic methods, even though they had maybe going back 10, 20 years of fantastic statistics, they all eventually blew up. And by blow up, I mean they lost everything. And so this taught me that it doesn't matter how great statistics are, you have to be a part of the process. You have to be able to evolve and change with the market. That means in a certain market condition, you may want to use one entry point. But once the market changes, then you decide to maybe use another or a different stop placement or a different exit. This is what we mean by saying you have to become a part of the process. So as we close, remember, just give Pro Trader Strategies a call. There's absolutely no obligation. They're very flexible. They'd be willing to work with you. And that number is 310-598-6677. And they posted the link there on the chat box. So that's a live link. You can click that on to take you to the info page. Okay. I want to thank you all for attending today. I hope you learned something. I wish you all the best of luck. And I want to thank NinjaTrader for inviting me to speak and Patrick for helping me with certain technical issues we had. But thank you so much for attending. I wish you all the best of luck, and I look forward to all of you in the Strategy Number 4 course. Thank you so much.
Thank you, Stephen. Very much appreciated. Thank you for taking the time to share that with us here today. If you enjoyed today's session, we hope you'll join us for future webinars. Follow us on social media for alerts about upcoming events and other NinjaTrader ecosystem news. We'd like to remind everyone that the information here provided today was that of Pro Trader Strategies and not of NinjaTrader. All information was for educational purposes and should not be construed as trading advice. Please enjoy the rest of your day, and we hope to see you in future webinars. Happy trading from all of us here at NinjaTrader.